Good morning, late morning, and pretty quiet day out there. Market gapped up overnight Sunday, ran up about 70. Actually, that ran up almost close to 80 points from the low. 43 was our low, and I think we traded as high as 22.23 on the SPOOs. You can see we're dragging here, and again, we rallied up to 32.20, and we're sitting right around 80, which was that mark I said we need to hold here, otherwise we're going to go test the lows from last week, 32.25-ish or so. Just kind of chopping out there. Dollar continues to be strong, and with Europe under heavy protests and riots from the shutdowns, see that, Democrats, and this is not what we want in our country. But nonetheless, the euro has been getting sloshed quite a bit. We were trading almost 119, and now we're down to the 116. So this thing is now at 1 month lows, and I think we're getting close to the 3 month lows now, also on the euro. So this is something that I think you need to watch here coming in. I think we're close to the 3 month. Bobby, you there?
Yeah, I am, but hold on a second. Why can't I? Oh, there we go. Hey, Matt, sometimes the broadcasting software can't be interrupted.
That's right. Well, you've got the availability if you want to share your screen. I think I've got you all set up there too.
All right.
Should be okay.
Beautiful. Good morning, Matt.
Good morning, Bobby.
How are you doing?
I'm doing great. How about you?
I'm fantastic, man. Never better. Never better.
Good.
I know you spoke a bit about the equities going on here, right?
Yep.
And I wanted to talk just a little bit about trade creation, right? Like how do you come about a trade? And sometimes, we have things that we have radar lists and stuff, that we rely on, but sometimes it's just on the golf course, right?
Absolutely.
Yeah. So we were golfing yesterday, and a fine young gentleman, what was the major?
Bioengineering.
And so we started talking about wearables and things like that, and how big that market looks like it's going to be. And then serendipitously, I see this tweet today. Under Armour sells MyFitnessPal, shutters Endomondo in retreat from fitness apps. It's funny how sometimes that's what happens, and all of a sudden something's on your radar that wasn't on your radar before.
Right.
And I started digging a little bit, and I really think the pivot here for Under Armour is they're way in over their head when it comes to the money that it needs to be put towards this, the medical interaction with the body. I mean, they're making shoes and helmets and shoulder pads.
So does Nike.
Right? I mean, it's like, what do you think you're going to do? You're going to compete with just the heavyweights in technology, because that is a technology play. That being said, when I pulled up the Under Armour chart, if they're shedding, units that are going to just cost them money and not pay off, maybe that's that's a great headline if you are involved in Under Armour.
Well, I think the best, again, I can't speak specifically to this line of products that you've got pulled up here. I don't know much about them, but, I think what Nike did well when they tried to get into the technology was always partner with Apple, and they have a Nike, Apple Watch, right? Co-branded, where it's really still just the Apple technology with the Nike brand and a different, band or whatever it might be, and a different face on the watch, but it's in essence the same guts as as an Apple Watch, an iWatch. So, I think they're just trying to, keep their feet, any of these companies, right? They want to seem forward thinking and smart. You keep reading about smart wear, right? From the Columbias to the Patagonias, and everybody's talking about how they can monitor and manage kind of temperature gauges for, so you don't have to peel off the layers all the time. And I think that, that's where some of these companies will benefit, is if they can come up with some of these, technologies, the Lululemons, the Under Armours, the Nikes, right? As they play those out, and the technology and the wearables comes into not only what's on your wrist or what's monitoring your heart, but kind of what's going on anywhere else. So I think you just have to, they have to, but to your point, sinking money into technology alone is probably not a smart move when you have Garmin and you have Apple and you have, Motorola and everybody else still out there trying to make the devices themselves.
Right on. I shared at marketvitals.io just in the common feed there. And by the way, just a little bit about marketvitals.io. The site functions a lot like a Facebook private group, with one big difference, right? That technology gods aren't interfering with the access between Matt and I. There's no algo in between the conversation that goes on the site, is what I'm driving at. Yep. No, Zuckerberg or his henchmen and his algo developers deciding what you should see or not see in the community. So please check out marketvitals.io, join the community. And again, so what I found another article towards this, and it kind of went, a lot of these players have done exactly what you said, Matt, which is a partnership, and the heavily laden technology. If you're a brand like L'Oreal has a skin UV tracker, right? Well, I'm sure that they partnered with somebody on that. They're not trying to develop the technology themselves, which is key.
Right.
But I want to do, hold on a second. I wanted to go to the chart and just show, and you could talk about this from the profiles perspective, but the weekly now, 6 weeks solidly in that up momentum position, so solidly gaining. And now we always talk about fractals and time frames, and we've just rolled a month, right, Matt?
Right.
We have the
we're into number 11 out of 12 this year.
And by the way, 11 kids in the family, so that's a great number for me. And I love playing the yo. There's a lot of great things about 11.
Come 11.
Yo 11. Give me the yo. The monthly now finally back above that monthly average, first time since way back over where my skull is, where they were in that type of pricing action. And again, we talk about vital, like the vital signs, like is this relatively sicker or healthier than it has before? The if-then statement, like we continue to do that, and we continually do that as traders. The if-then, well, if the 4 hour, gets healthy, that's going to impact where it is on the daily, when the daily gets healthy and so forth. So again, radar screens, things come on your radar for weird and different reasons. But for sure, a conversation on the golf course has got my attention to this space. Were there some other names that you wanted to cover in the space?
Yeah, I mean, take a look at Nike and Lululemon while we're here, and we could also look at Peloton. I mean, these are all related to, the lockdown economy that we're in, right? You're wearing comfortable clothes at home, athletic wear, even if you're not an athlete.
Matt, not to poke fun at Italians, but the Italians have never been more prepared from a tracksuit, sweatpants frame of mind. Nothing better than the look of the V-neck sweater, right? With the sweat track pants. I love the look.
And a chain.
All right, you want to pull it up or you want me to pull it up?
Which one do you want me to pull up?
Let's pull up Peloton, right?
Sure. Let's bring up Peloton. Hang on one second. Let's start with Lulu. Since you talked about it, I'll give you a market profile perspective. I'm looking at basically a year chart here, just to kind of give you a big, long-term picture, longer term that I would look at. And again, this has gotten into breakout territory finally after the, COVID sell-off. We went from $19 down to, $6.50. It looks like here, and we've gone up to 13. So we've doubled from the bottom. Slow and steady too. This has not been a super, compared to so many of the other tech charts and all the other charts out there. This thing is just kind of chopped along until September. And now I think we're getting into the seasonal move, Bob, on, the athletic companies from Nike, from Under Armour, right? You're getting the Christmas bump, if you will. And these tend to typically then fade a little bit in the first quarter of the new year because everybody blew their load, buying all the clothes that they needed for family or the clothes they didn't need, but they bought too much, and now they got to pay the bills. So this is one thing to think about: the cyclical nature, not only to the idea that you have, but these are cyclical consumer stocks, and as they get to the end of the year, you're kind of running out of buyers until the spring, and then if we have a spring sports season for the kids, starts ramping these up again. Let's look at Lulu also, since we're talking about these, the wearers. And Lululemon has also been very bullish. This one is the opposite. This thing bottomed down here at 120 and traded all the way up to, believe it or not, $400. Just insane.
Whoa.
Yeah. So it's just crazy when you think about, the market cap on Lululemon today is around 40 billion. And that's just boggling to me, the size of, the tights market. That's what I'll call it, the Lululemon tights market. I mean, they are just astronomical, but people love them then, especially the women. They love the loungewear and the Lululemon, right? The other one I'll bring up Nike real quick, just since we're talking about, the athletic wear companies. And Nike also had a huge run and went from, it basically doubled from $60 all the way up to 134, and now is rolling over. Again, the whole market's rolling. Most assets are one right now. So we're kind of seeing this little pause in the markets in general, way above value on the 1 year chart. I mean, I would love to be a buyer today at 100, but we're not going to get there from 121.
Right.
But these become the levels, kind of that 80 to 100. If I was looking for a pullback, and I missed that doubling, that would be an area I would be looking to, to kind of come in and pick up some of the stock. On Peloton, again, you're seeing the same thing. This thing's gone ballistic, just came public, not too long ago. I think it was about a year ago. Let me give you, this is again, looking at the March low of 17, and we went up to 140 and we're pulled back to about 112 here. But again, on the daily chart, a lot of room to go until you're back to the value range, which has been in kind of that 30 to 80 range. Very choppy, not a very solid foundation here. So I think this thing will have quite significantly pummels on its hit. Now with Christmas coming again and Christmas shopping really going to be changing this year because nobody can go to stores. Matter of fact, I saw today that 2 more mall operators on the East Coast, regional ones, but there was one in Pennsylvania that had about 18 malls, and PA, Maryland, and DC, another bankruptcy there, and another one nearby. So you had 2, public REITs going under again, and just goes to show you nobody's going to the malls ever again. I mean, the Taubman Company mall model is over. I really believe shopping's going to be a lot different going forward.
What's up, Rudy?
Hey, Rudy.
Rudy on the set. Yeah, that coincides with the chart you shared on Friday of the home. Look at him disappear into the market vitals background. That is awesome. Now, we're going to talk about this when he gets back, by the way. So much of my life is serendipity. Matt, when you walked away, you disappeared into the market vitals background. I mean, it was like magic. But what appeared them is just the back of your seat with that Michigan M there, just perfectly for all our viewers, reminding me serendipitously the beautiful way that you sang the Michigan fight song. And then, what a letdown for you as a Michigan fan that's seen 300 games. Sparty, especially your cross-state rival. I mean, how much do you hate Michigan State? And they come in and just put a thumping?
Get used to it. I mean, it's been it's been almost 2 decades of this, so it's not new, Bob. And
do you have your Fire Jim T-shirt ready to go?
I don't yet because I don't have a replacement for Mr. Harbaugh.
Right on. Well, I saw a guy that had a Fire Jim, and who was the coach before Harbaugh? That was a Jim too, right?
No, we had we had Rich Rod, and then we had whoever the other guy was. They both were terrible, but I'm trying to forget. I'm trying to forget these last couple 15 years of Michigan football because it's been painful. I mean, yeah, we win 9 games, big deal. We win 9 or 10, but never beat Ohio State and barely beat Michigan State anymore. So it has not been fun. It has not been fun. So thank you for.
Hey, listen, I wasn't going to bring it up. The gods, suddenly you disappeared and the Michigan emblem was right there for everybody to see. If I don't talk about it.
But more importantly, Bob, you lost the bet because I took Michigan State in the 23
so
points. This is a good jump off because this shows how I don't bet with my heart ever. Matter of fact, I will bet against Michigan all day just because it makes me feel better, and they generally don't cover anyway.
At least you won a round of golf next spring when we reopen the season.
That's right.
Or you can substitute it for several bowling games as the bowling league is about to kick off. Are bowling alleys open, by the way? I don't even know this.
Bowling alleys are open here in Central Oregon.
Right on. Mm-hmm. All right, man. All right. What else do we got? We got, we've talked about the election ad nauseum. And thank God it's over tomorrow. I've never looked forward to something more in my life than. But the problem is, well, maybe it's not going to be a problem. I firmly believe that El Trumpetente wins in a landslide, and that all the prognosticators are wrong. That this is going to take several months to clear up. But again, we haven't seen relatively. There's been some volatility. They a lot of people short on Friday, right?
Yeah, well, they get short Friday and they jam it up their butt today, but we don't go anywhere new. So this is again where if you understand where we've been the last couple days, the last 5 days, this market I don't think there's anything in it that you should be looking to buy until we're well through this election. And I think we could easily see 2,900, 3,000 on the S&P, and it has nothing, Bob, nothing to do with where we are. So, I think it's nothing more than the market was just due for a correction. It has nothing to do with the election, who wins, who doesn't win. The capital flows is all that always matters. And what's happening right now is the capital is pausing. It's taking some money off the table. It doesn't look like anything more than a concerted, hey, we're going to sell some stock. You got end of year, you got end of quarter, the last quarter all coming in here, and you've got big profits. I don't care what you own. It's made money. Why not take some profits, lock them in?
Right.
You're going to have that tax selling pressure that always comes into markets this time of year again. People who if they want to book in gains and or losses and then wait for a rotation into something in the early part of the year. I mean, there's a lot of funds that have done extremely well, and there's a lot that haven't done well. And depending on where you are on that side of the table, if you've done well, you might ride it out a little bit, but you're probably going to box it in and maybe buy some, put coverage, some downside coverage if you're a portfolio manager. And if you haven't done well, geez, you're going to sell the losers and position yourself hopefully for a better next year. So a lot of those mechanics are always going on into the market, but I think election or not, this market's been under pressure for a couple of weeks already, and I think it'll continue at least through Thanksgiving. So, that's only a month sell-off, and we're not quite 20% off the highs again. So I don't think it's anything to be like, War of the Worlds type stuff yet, but a lot of things can happen over the next few weeks. Who knows?
There's no doubt about that. No doubt.
Ton of
things. Right.
the thing that I still find interesting, and I was talking about this earlier, and we haven't talked about it, but I'll throw it up here. Let me throw up a chart. The euro, Bob,
Oh yeah.
has been getting crushed, and this is significant because we actually today took out kind of a 3-month low, and we're right at it, right at this 116 level. And the dollar on the flip side has been bumping up there, 94s. It's not the dollar. Neither of them have either broken down or broken out. So I think you have to watch this, that the dollar euro combination here. And by the way, if you haven't looked at the DAX, and we kind of talked about this, I think a little bit last week, the DAX has been getting crushed. This is the German index.
Whoa.
And it's down, it traded all the way down here to 11.5 from 13.5. So that's significant. That's almost 2,000 points on the DAX, which is would be the comparable index to the Dow for the German index. And that took out the lows again, and it kind of held one more time there at the 11,500 area. So it held again, but we're only at 11,788. If the riots and everything continue to happen in Europe and continue to grow, and they haven't really, there's been some in Germany, but if that starts rolling over into Germany, which is the biggest economy over in Euroland, you can say night-night. I think it's going to be trouble for these guys.
Right on. Yeah, that doesn't quite look like the same V shape that the U.S. economy had, and a lot more sideways.
Correct.
So they put in that whole meaty part of that sideways volume, and everybody there now is underwater that's long.
Well, but again, this is May back here to this middle part of the chart that I'm pointing out. So yeah, it has been a solid 5 months, 6 months that we've been, we bumped up there, and now we're kind of back to where we took off from. So it's do or die time. It's decision time for a lot of people, and with the year end and everything, and then they've got their elections coming in 21, which, by the way, they've canceled, and that's not helping this also. They're pausing and canceling many European elections, including Germany right now, which is just beyond crazy to me. Beyond crazy.
All right, Matt, I'm going to enjoy my Bob Ross. This is the technology that I love, right? It's the Bob Ross, and when you pour hot stuff into it, a painting appears. And it's something to live by, Bob Ross, right? His painting is, we don't make mistakes. We have happy little accidents. Well, I'm not so sure about happy accidents in trading on the golf course, but
So what do we have tonight? We got Monday Night Football. We got Tampa Bay versus whoever. Tampa Bay is like a double-digit point favorite. So
what we have, Matt, is the
Giants, the New York lowly Giants.
Oh,
how about that game last night, Philly and Dallas? What a
didn't watch a snap.
They didn't miss anything.
Didn't watch a snap. It's like the freshman game. I don't even go.
Unless your freshman's on the team.
What we really got going tonight, though, is the Cajun candied salmon with the manja rub. Cannot wait to show you the artistry in the kitchen that's going to happen. All right, man. Listen, thanks so much. We will be back tomorrow with a Trump victory speech. I imagine probably about 3 p.m.
All right.
I just say that to get under people's skins. As a former floor trader,
he will have a victory speech whether he wins or not. But,
well, for sure that's happened. I mean, the question is, what time does he say it's over? What time is he calling it?
Right.
All right, pal. Thank you. Thank you, Matt. We'll talk tomorrow.